Over 80% of small businesses fail because of cash flow, and that's why planning finance is so important for your business. Hi, I'm Ian, co-founder at Focus15, and today we're talking about how a loan might work for your business. There are basically two main types of loan. Secured loans, which are backed by assets such as property or equipment, and because they're secured, they present less risk for the lender, so they tend to offer you a better rate and higher borrowing limits. But obviously, they present a risk to the founder because you could lose the security if you default. And many early stage founders don't actually have enough security to obtain this type of loan in the first place. Then there are unsecured loans when no collateral or security is required from the business, but the lender may still require a personal guarantee from the director. Unsecured loans are much less common and typically offer lower borrowing limits and higher interest rates. However, one of the most popular and affordable is the government-backed startup loan scheme run by the British Business Bank. That allows founders to borrow up to £25,000 at a fixed interest rate, currently 6%, and it's repayable over 1 to 5 years. Whatever option you choose though, do your homework before committing to anything. There are lots of organisations out there cold calling, offering to lend you money, so make sure that the company is reputable with an FCA registration, and don't just take their word for it, actually check it. Make sure the interest rates are competitive. For secured loans, you may expect to pay 1 to 7% above the base rate. For unsecured loans, it could be as high as 2 to 15% above the base rate. Make sure you're aware of all the fees. Avoid anyone asking for an upfront fee before releasing a loan because it's probably a scam. Watch out for lenders charging high fees to verify things like your identity or creditworthiness. Again, probably a scam. Be aware of the early repayment penalties and watch out for loans that start with low rates of interest that then spike later as you go on. If you use a broker, make sure you understand their fees, they're disclosed up front and they're in writing. And perhaps the most important thing of all is understand the implications of missing a payment. Even by a day, watch out for anyone who charges excessive fees for being late, because it can quickly spiral out of control. Loans can be a great way to grow your business without giving away ownership or control. You just need to make sure that you can repay it comfortably. So build a detailed financial plan, only borrow what you need, and know exactly what you're going to use it for, and be transparent about the risks, be honest with yourself about the risks. We've tried to develop better relationships with some of the leading lenders, so if you do need any support, please get in touch. If you found this useful, hit subscribe, drop a comment, or get in touch at focus15.co.uk. In the meantime, stay focused and see you in the next one.